Hello everyone, my name is Brahanu Taddasadaba and I'm a Senior Researcher Associate at IBFD. What are tax-related illicit financial flows, hereinafter referred to as TIFFs? Currently, there is neither a universally accepted definition of TIFFs nor consensus on what should be included in the scope of TIFFs and how the components should be determined. TIFFs are multidimensional, comprising several different kinds of flows, including flows ranging from illegal activities or transactions to transfer of funds that have a legal origin, and flows stemming from legal activities being used in an illicit way. As a result, the concept of TIFFs has been understood and addressed in different ways by different stakeholders. TIFFs undeniably pose systemic risks for the financial and tax systems of countries by hampering the efforts to enhance domestic resource mobilization, fostering inequality, creating or exacerbating poverty, insecurity, and financial challenges, and undermining public confidence and trust. Consequently, TIFFs can happen through tax evasion, trade misinvoicing, tax avoidance, and abusive transfer pricing or transfer mispricing practices. These are largely supported, among other things, by lack of relevant information available to tax administrations. What are the implications of TIFFs? The TIFFs that arise from tax evasion and tax avoidance practices have wide-ranging negative implications for compliant taxpayers and society as a whole, as the tax burden shifts towards sources and taxpayers from which tax can be more easily collected. When it comes to the revenue implication, currently there are no methodologies to accurately quantify revenue losses through TIFFs due to difficulties in gathering data for the measurement of TIFFs. Despite the difficulties in quantifying TIFFs, there is a range of estimations made by different studies and reports of regional and international organizations. For instance, according to Christian Aid estimates, developing countries lose 160 billion USD annually and lost about 2.5 trillion USD in tax revenue from 2000 to 2015. Tax Justice Network also reported in 2017 that developing countries' estimated losses exceeded 20% of their total tax revenue. According to a Global Financial Integrity with GFI report from 2021, developing countries incurred estimated value gap of 1.6 trillion USD in trade between 134 developing countries in 2018 alone, based on a study from 2009 to 2018. The UN Economic Commission for Africa and GFI reports also show that African countries' revenue loss through trade misinvoicing from 2001 to 2010 is estimated to be around 407 billion USD, and as per the UN Economic Commission for Africa, and around 242 billion USD as per the GFI report, respectively. Despite the predictable differences in estimates, the TIFFs outflows intrinsically and significantly affect the tax revenue that countries could collect through, among others, value-added tax, or goods and services tax, or sales tax, excise tax, custom duties, and corporate income tax. If so, how can countries counter TIFFs? A country needs to follow a holistic approach to tackle TIFFs with clear and comprehensive policy, legal and institutional framework, as well as effective interagency cooperation within the country and international cooperation. The Addis Tax Initiative, hereinafter ATI, Secretariat has commissioned International Bureau of Fiscal Documentation, IBFD, to carry out a study on ATI partner countries' perspectives in combating TIFFs. This study presents the main practice of some of the ATI partner countries that have participated in this study, with the aim of enabling ATI partner countries take lessons from each other in combating TIFFs. The study covers various policy and regulatory frameworks of the countries in combating tax-related illicit financial flows, including policies, strategies, and legal frameworks on tax evasion, tax avoidance, transfer mispricing, and trade misinvoicing in cross-border context, as well as on transparency and exchange of information in tax matters. It also covers institutional setups to enforce the policy and legal framework and their level of implementation and interagency cooperation, international cooperation for transparency and exchange of information in tax matters, capacity building initiatives, challenges, successes, and next steps in combating TIFFs, and main conclusions and practical recommendations for further steps. To know more about the findings of this study, including other countries' experience, challenges, successes, and helpful international and regional initiatives, please join us on the upcoming 8th Year General Assembly meeting that takes place in Lusaka, Zambia from 20 to 22 June 2023.